Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to have a look at day trading using the micro E-mini accounts with an example on the NQ from yesterday. But as usual, let's start with our risk disclaimer and just remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration or trading purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept that losses can and will and do unfold. It doesn't matter what trading approach you take, there always will be losing trades, and it's important to keep those under control. So let's have a look at the MNQ. In this video I'm using our add-ons for NinjaTrader 8. The MNQ is the micro of the E-mini. It's the smaller account of these. So for those of you who've been following MTPredictor for a while, will know that we teach that markets basically go through cycles, and basically 50% of the time or slightly more they're in a random phase and you can't really make any discernible analysis or any clear pattern. So the idea is that we actually wait till the markets become clear. So to do this we go to the higher time frame chart. So if you're looking to day trade on say a 3-minute chart, you go out to the 15-minute chart, which is what I have here. If you say day trading, or no, if you're just trading daily stocks, then you go out to a weekly. If you're say trading forex or perhaps an hourly chart, you go out to the 4-hourly chart. So the next logical time frame between 3 and 5 time frames higher. So here we had the last swing into the last low. You can see there's the major low, so that's the last swing into the low on our 15-minute chart. So if I right mouse click over this last pivot high and do decision point, can you see how that gave you an area of resistance? But I've scrolled the chart along to show you how that resistance was on the chart in advance. So it was here a couple of days before, so it's been there for a few days. So let's see what the NQ did yesterday. If I scroll along, you can see the NQ went up and rallied up, and this is when the Fed made their half point cut yesterday, and you can see all that happened was the market rallied up sharply into that decision point resistance where it reversed and then turned over. So let's now see what difference that made on the 3-minute chart. You can see here's our 15-minute resistance, and here it clearly you can see how the market was turning over. In other words, it was making a reversal at your anticipated resistance. In other words, the picture was starting to become clear. So the market trend was then deemed to be down after this reversal at this higher time frame resistance. This was confirmed by our MTP trend color going red, confirming the large degree trend going down. So in other words, this TS1 wave 3 trade setup was in the direction of the large degree trend, and it was when the picture was clear because the market was coming off higher time frame resistance here. So if we now say we had a slightly smaller account because we're trading the micros, normally I look at 2% with a sample $20,000 account. So let's say you had a slightly smaller account, say $5,000. So in this case, 2% of $5,000 would be, you'd be risking $100 per trade. In other words, when the trades go wrong, you'd have a $100 loss. So let's right mouse click over this red cell bar here and then do analyze trade setup, and you can see this gave us your trade setup. Because this is a W3 trade setup, we're looking to then trade the wave 3, which is normally the strongest and longest in a completed 5-wave sequence. The market didn't actually reach this target, but the target profit down there would have been a massive 17R, or 17 times greater than the initial risk. If you'd held it into close, which would have been about here, you still would have come out a profit with approximately 11R, so turning a $95 risk into just over $1,000, so an almost 11 times our profit. So it would have been a very, very nice trade indeed. But let's actually have a look at a bit more detail on this and see whether we could have done slightly better. So let's go back to our 15-minute chart. Let's have a look at the rally up into the high here. If I right mouse click over this pivot and do edit wave intermediate, you can see that this actually was a 5-wave sequence with the high coming in right at the typical wave 5 WPT. This is where the Fed cut went right into our typical wave 5 WPT. After a completed 5-wave sequence, the market tends to then go back to the DP from the prior wave 4. So that's why I scrolled the chart over to here, because remember our DPs are on the chart in advance, they're leading indicators. You go back to the prior wave 4, right mouse click, do decision point, there's your area of 15-minute support. That would have been on the chart in advance. Look what the market did. Went right down to that DP before the market started to rally off those lows. So what difference would that have made for your 3-minute chart? Well, now you can see how clearly the 15-minute DP caught the low of the day beautifully. So if you were in this trade here and you now got down to this higher time frame support, you would have been sitting on a profit of approximately 13R, or 13 times greater than initial risk. At MTPredictor, we try and teach that you should run your trades. In other words, try to let your trade run as far as possible. But if you've got a higher time frame support, or resistance, or support in this case, and you're sitting on a very big profit, in this case 13R, or 13 times the greater than the initial risk, was a very big profit, well, maybe it makes sense to try and take that. As you can see, that would have been a very good decision, because that turned out to be the low of the day as the market rallied. By the way, these two history triangles, or losing trades here, you'd have been avoiding because our MTP trade had turned blue, and obviously you're rallying up off this 15-minute support. So with a bit more experience, this would have been the best trade to take yesterday. And as you can see, it would have turned out to be a very, very good trade indeed. But the point being for this video is because we're using the micro accounts, the MNQ, it allows you to do your position sizing with a slightly smaller account. Which is very interesting, because even if you go out to the normal NQ, there was exactly the same setup there yesterday, with a high coming in there off that DP absolutely perfectly. There we go. And if I go back out to our normal $20,000 account risking 2%, trading the normal NQ, can you see how the risk would have been exceeded? Oops, I missed that. That's it, that one there. The risk would have been exceeded. It would have been greater than the 2% of a sample $20,000 account. So with the big moves over the last week, even the standard NQ, the initial risk would be too big for our standard $20,000 account and 2% risk. Sorry, the NQ. So MNQ is there. So coming back to that, that's why it would be a good one to take on the micro account. Very similar position on the ES, the MES. Here it is here. Again, if I go out to the higher time frame chart, there's your DP off the high there. You can see that caught the high even better, absolutely perfectly, as the market went into that high there. We then go to the 3-minute chart, and there's your TS1 sell, or your trade setup there. In this case, into the first target there for a 5.7R profit. So it wasn't quite as good as the NQ, because the NQ, or the MNQ, was a wave 3 trade setup, so it was anticipating that it was going to go down a little bit further. But nevertheless, still a very nice trade there on the NQ, so the ES. Let's go back to our 5K account, and you can see there's our position sizing taking care of our 5K account. So the best trade setup yesterday was on the NQ, and there you can see with the higher time frame analysis coming off the 15-minute DP there to nail the high. That then made the picture clear, because the market was reversing off our anticipated resistance. The large view trend was therefore down, confirmed by our MTP trend being red. A W3 TS1 W3 trade setup then got you short into the higher time frame support zone. Again, that was on the chart in advance for a profit of approximately 13 times the initial risk. So all in all, a very good trade setup and a very good day for MTPredictor yesterday, with us taking a look on our add-ons, our MTPredictor add-ons for NinjaTrader 8 using the Micro E-mini NQ.